It is the morning show on ETV on this thankful Thursday. Thank you so much for choosing to stay with us. We are live and in your company until 8:30 namhlanje kuseni. And right now we're joined by our resident personal finance expert, Sis Babala Nonkenge, who joins us namhlanje kuseni to unpack some important considerations as the end of the tax year approaches. Sis Babala, enkosi for joining us this morning, Mol.
Nkosi, thanks for having me again.
Sizothetha about something that can be very confusing, but also very daunting for a lot of people. Xa sithetha nge-tax. And xa sithetha nge-end of the tax year, there seems to be a confusion amongst a lot of people about the differences that are there, because kune deadlines ezikhoyo zibe ninzi. We know of the 23rd of Jan, which is gone, which was for the provisional income tax, right? So tell us about that and the difference between that deadline and the deadline that is looming of the end of February.
So the way to understand it is that a normal year starts on the 1st of January and ends on the 31st of December. For tax and fiscal purposes, the year starts on the 1st of March every year and ends on the 28th of February. So now we are approaching the 28th of February, 2023, which is when the 2023 tax year is ending.
Right.
So from the 1st of March until the 28th of February in 2024, that is when the next year, that's the parameters for the next year.
Right.
And so because we are different entities, businesses, salary earners, provisional taxpayers that you've just mentioned, we all get different deadlines in order to submit our tax return, I guess to manage SARS workflow as well, so that there's not much of an influx.
Right.
I hope that explains.
I also hope that explains it. At least for me, there is also that clarity. So I do hope that for you at home, there is that clarity if you had a bit of a confusion. But let us in then, Sis Babala, on the importance of compliance when it comes to this time.
There's a saying, Nelly, that says that two things in life are certain, they're sure. Death and taxes.
Yeah.
And so as painful as sometimes it is that we are paying taxes, the truth of the matter is that we wouldn't have schools, we wouldn't have hospitals if we were not contributing. Think about it as a collective national stockpile. We are all contributing so that we can have roads, we can have clean water, we can have schools, we can have hospitals. And so the receiver of revenue is collecting on behalf of the government from each of us, particularly if you are employed or if you have a business, towards the effort of having schools and clinics, etc. Now, we might try and run away, but there are also what's called illegal or evasion of tax, which I wouldn't encourage to do, because there are legal ways to reduce the amount of tax that you pay.
Yeah.
For example, if you have a side gig and you are employed, the expenses that you incur in earning that additional income are deductible against your income, which is to say that they reduce the amount of taxable income that you must pay tax on at the end of the day.
Right.
Rental income, which a lot of people have, it's not a good idea to hide rental income. But however, every time you renovate, every time you improve that property, those expenses are considered earned in the process or in the aid of earning that income. Therefore, they are deductible against that income, which then reduces the tax that is due from you.
Right. That's very, very important information. So, Sis Babala, let's talk then about the tax planning strategies when it comes to planning for this particular season.
So right now, there's about 5 weeks left until the 28th of February.
Yeah.
And so if you are employed or if you are even self-employed and you are wanting or you are already saving for retirement through a product called a retirement annuity, you are allowed to contribute up to 27.5% of what you earn, the greater between taxable income and gross income, towards the retirement annuity. And the great thing is that that is almost a sure way to get a refund.
Right.
The government is encouraging all of us to put money away for retirement so that we don't become a burden to the state when we're older. And the capital and interest growth on those investments is not taxable. And so I would encourage our viewers who are watching this morning to do calculations to see those debit orders, did they come up to 27.5% of your taxable or gross income? Because if you've got some spare cash, amounting to a minimum of 5,000 rands, you can top up. And a lot of the service providers, your insurances and your investment managers that offer these products do give the opportunity up until the 28th of February for you to top up. Now, it's important that by the 28th of February, those funds are reflecting, which means that you must act now so that by the middle of February, you are transferring those funds in order to maximize the advantages that this brings to you.
Right. And I mean, once we're having this conversation, Sis Babala, it does sound like kune admin eninzi ofuneke yenziwe. And that's probably why sometimes abanye abantu bangazuyenza into ye-tax because mninzi umsebenzi. What are other things that people can probably do? Can I get someone to help me? Can I get it maybe a tax practitioner or get an accountant? Who can I get to help me with this? Is that even an option?
Of course it's an option, and it's a great option if you feel that you are too busy or you don't have the expertise, because then you know that you're dealing with a professional and you can potentially avoid interest payments and penalties because those are real. The receiver doesn't just look away when you have missed the deadlines. You know, they will charge you penalties, they will charge you interest on amounts outstanding. So definitely I would encourage viewers who don't either have the knowledge or the capacity time-wise to reach out to a registered tax practitioner. For most of us though, the receiver has made it very easy in that the tax returns online come pre-populated with the details of your RP5, which your employer issues. Now, the only admin for that type of person is to ensure that things like your medical expenses, particularly those ones that have not been covered by the medical aid, you know, where you bought medication or paid for consultation over and above your medical aid contributions, include those. You know, people that have side gigs, people that have rental income, make sure that both the income and the expenses are included as part of your submission. And people who are saving for retirement apart from their employers, contributing to retirement annuities, everything that you get from an asset manager or your insurer that's got the word tax or IT3B, A, B, C, be sure to include that as part of your submission.
But sometimes guesses babala uzawufumana, for instance, freelancers, and that is why TV, you'll see a lot of the celebrities, they're in trouble with SARS, right? Because kange basubmite izinto. There is also that confusion amongst freelancers, particularly in our industry, in the media industry, as to, do I need to keep receipts for everything that I do? How do I go about this process? What advice do you have then for people like that? Because you are touching on side gigs, but if this is not a side gig, these are all my gigs because I don't have a 9-to-5, for example.
You know what? I empathize with people in the creative industry because I understand that this is not necessarily part of your training as an artist or as a freelancer. But keeping slips is a great first step. The beautiful thing these days is that there are software packages or even apps on your phone that you can use as you, if you're taking someone out, you can scan the slip quickly. Because what you want to make sure is that you don't understate the expenses that you use as part of your submission, because that's what's going to help you get potentially a refund against the tax that you've paid. And the income that you earn, I would hope that the people that freelancers work for are registered adequately for employees' tax. And it's very important to keep record of all of the incomes that freelancers earn, because at the end of the tax year, that income is going to be tallied up against the expenses, and that's what's going to become the tax position. Please don't shy away from submitting, because those things can even inhibit you from getting opportunities for future work.
Absolutely.
And so it's very important to not put our heads in the sand and rather do the admin. It's not too much if you keep up with things like tracking your expenses.
Absolutely.
And like I said, there are professionals that one can reach out to for help.
And Sis Bumps, for someone who's watching us and they think, Joe, I need more information, where do they find you? So we are on all the social media platforms. You can use my name to look up Babalwa Nonkenge, or the name of my podcast, Epoko20. We've also got our website where you can book an appointment on epoko20.co.za. All right, and there we have it. Thank you so much, Sis Bumps. Really appreciate it. Personal finance expert and award-winning podcaster Babalwa Nonkenge, giving us tips on what we need to pay attention to as the end of the tax year approaches.